Alright, today is Saturday the 15th, March 2025. I wanted to talk about the CPI and the PPI week that just closed starting Monday, right? And this is the economic calendar here. So we had Tuesday we have job opening, JOLTS job opening. We had Wednesday 8:30 CPI, and then Thursday 8:30 PPI, right? So heavy hitters. And then Friday we had a Michigan consumer sentiment, I guess, PREL. So heavy news this week. And what I saw on oil was the fact that we were trading in between this low and this high going into this week, right? Where it's a more or less a consolidation profile, right? So in consolidation profile, I decided to trade within this range here. So going into Monday, I saw this low, right? Coming down into this low. We never hit that on oil, but on gasoline, we did hit that, right? We created that lower low. So we have lower low here in gasoline and a higher low here on oil. So if you mark up the chart here, this is what I saw, lower low, failed to go lower low. And this was the high that I was monitoring. So once we came here, we had the diversion. That was the first signal that something might happen and we might have a bullish push up toward here. So nothing happened until we broke through this fair value gap here, and then we came back down and supported this fair value gap. How do we support it? We created a swing low here. So we didn't necessarily have a order block created here. You can go down to a lower time frame and see if there was an order block there. But I didn't go down to 1 hour chart. I strictly wanted to stay on 4 hour chart for oil and then go down to a 15-minute or a 9-minute type entry. So we have breaker of the fair value gap here, support of the fair value gap here with the swing low formation here. Now this was the candle that closed in this order block, so this candle is telling me that we're going to be trying to push higher, at least above these highs here. So this went into Asia session, and then London session we probably took another pull of liquidity here from Asia. There was a divergence in these lows here, and we broke above on Wednesday. So I missed this move here, and when it came back down into this order block, I missed this move again on Thursday. But on Friday, what I saw was that we came back down into this 6 o'clock candle. We came back down into that order block here, right? That supported the fair value gap. So we came down into there, right? Again, we saw a support here by creating a swing low, and what I saw was we had a divergence here with gasoline. So we created a lower low there, excuse me, and we created a higher low here. The size of the candle wasn't very impressive, so I didn't have any expectation to go up here. So my take profits were somewhere around here, where I wanted to see the market push up into here, and then ultimately to this high. But again, on Friday, highly unlikely we'll be hitting this high later in the session, especially at that 1400 candle. So I would drop down into 15-minute chart. I usually drop down to 9-minute and 15-minute to find entry. So we had the divergence, we had a change in state of delivery here. We saw the support of that fair value gap, formed a swing low here, another order block created here. This is that 15-minute order block that aligned with the 9-minute order block here, right? And we had a change in state of delivery, followed in, coming back in for a support. So this is what I was looking at going into 2 o'clock. So I saw this swing formation here, and a 15-minute chart was a little bit more clear for me. So again, order block there, swing formation, close back inside this candle. This is the candle that I can start to trade. So I entered here, and my take profit was up here just because it was 2:30, and I didn't want to hold on to the trade. Oil slows down post 2:30, 3 o'clock. It just consolidated. So I didn't have any hopes for here. So nonetheless, it was, I think, 1-to-1 trade. This was a 1-to-1 trade. My stop loss was somewhere below here, and my take profit is obviously here. So this is a trade in actual market. So swing low formation. This is 2 o'clock, right at 2 o'clock. Take profit somewhere around here. Overall, oil trade was a great trade. Reversal into this range here, or possibly go higher, right? Because we've been dropping down for so long, or a continuation pattern lower. So if there was a continuation pattern, we should have tag the midpoint or some type of highs here to go lower. If it's going to be a reversal, we're going to have to tag these lows and start moving higher. So same thing on ES. We have been going lower and then going higher. So as you can see, as I can see, took a lot of trade this week, partially because I wanted to gather some data, and secondly to actually trade, to actually make some money. So how did I trade this? So going into this, we have Monday. Tuesday, we took the Monday's low, and then we closed inside that range, right? So the trade idea for me first started on Tuesday. This is the ES chart. If you look at Tuesday, what I saw was that we took Monday's low on both ES and NASDAQ. We both took the chart, took the lows. We started changing in the state of delivery, and by London times, we were up here. So if it's going to be a continuation day, we reverse from the Monday's low. If it's going to be a continuation into the higher chart here, right, we should be able to come back into these areas of discount, maybe run liquidities, or come into this area of discount to push higher. I mean, we ultimately did, but Tuesday was that 10 o'clock jolt opening that kind of threw me off. I did not see this. I didn't anticipate this type of movement on the jolt opening. So nonetheless, we come into this fair value gap. We had this expansion. So first of all, trade idea failed because we did not have a divergence here. That was number one. Number two was the fact that there was a 10 o'clock job opening news coming, and I did not factor that in. So I started trading, as you can see, 9:30. Right, so 9:30, 10 o'clock, I started trading right at the news. So again, when we came down here and took the London lows, right, there was no SMT there. So that's one of my criteria personally to trade. So that there has to be an SMT for me to take a trade. So there was no SMT. Nonetheless, I started entering longs here, and market kept going short and short. So that was a mistake on Tuesday, or a learning lesson for Tuesday, because I violated my own rule with an SMT. Now Wednesday was a great trade because Wednesday was actually a 8:30 CPI, so the news actually came out at 8:30. This is the 8:30 candle that took the highs, right? Now again, there was no SMT here on the highs. If you look at the ES and NASDAQ, this is the ES. That's what I took the trade on, and again, I was gathering data on NASDAQ as well, so I tested my theories on that way. So the theory was, if there's no SMT, can I still take the trade? The answer is yes, you can take the trade, but your stop loss and risk ratios has to be more tighter. And market does not always get to your calculated take profit. Yes, I was in profit while I took those trade without an SMT, but they're all losses. So 100% loss without SMT, and with an SMT, I had a 100% hit rate for this week at least. So ES, I took this trade. This was a great trade actually. So 8:30 created that news. CPI news comes up, closed back inside like this huge wick. Now going into 9:30 opening, I wanted to see how this wick was tested. ES, the wick was never reached. Like midpoint of that wick was never reached. Whereas NQ, we went deep into that wick. So there's a SMT here from 9:30 SMT. And if you look at it on a 9-minute chart, and again, I like the 9-minute chart. I know it's an odd time frame, but it has benefits that I can see. So again, we had a wick, and then we had a change in the state of delivery right there at 9:36. So same thing. And I saw this live. You know, the live, what I saw with this market was, while this was reaching high, ES was just consolidating, right? So look at the candle movements at going into 9 o'clock. They weren't moving. Whereas NQ, they were reaching. You can see these candles reaching for these higher levels here, with velocity, with movement, with force. Whereas these candles, 9 o'clock, starting 9 o'clock, these candles were very lethargic. They weren't reaching at all. Finally, I saw this change in the state of delivery at 9:09, but I didn't want to enter here. I wanted to reach up one more time, to clear this high again, and then change in the state of delivery. But I entered nonetheless at 9:27ish. Once I saw the changes to state of delivery, right? So 9:27, we had that up close candle with the change in the state of delivery. Same thing here. We had we didn't have a change in state of delivery here. Ideally, what I was waiting for is that 9:27 This was the reaching for that 927, 936 is when that change in the state of the delivery came. So I entered early, knowing that these were reaching higher and the other ones are failing to reach higher. So that put me some type of a confidence there, and it was for the first time I saw actually the divergence live market. So this was the first time I saw the divergence live market, and I was confident in taking this trade. And then I measured out obviously the take profit areas here based on this manipulation. So you can measure this manipulation here on ES chart, but with NASDAQ chart, what I manipulation was this candle for me. So 2.5 is here. So, and I was targeting these lows from Wednesday, right? But the Wednesday lows were hit on ES because this was a weaker pair, right? There was a SMT on this pair, and it was a weaker pair. Or hold on, not this one. This one here. This was a weaker pair. It failed to go higher, and obviously it cleared the lows there. And I was holding on to 4. Wanted to see, because we're bearish market on the daily chart, I wanted to see if we can go lower into these Tuesday and even Monday's low, or Monday, Tuesday's low. But it didn't give it to me. I thought that this, so there's a candle here that closed inside. This is a doji candle. So I exited here, knowing that it might give me a deeper retracement because it's 11 o'clock. 11 o'clock already, and going into lunch it might consolidate, so I don't want to hold on to it. Again, you can see I entered back and forth here, but ended up getting stopped out. I wanted to go short, but every time I went short it stopped me out. So overall this was a good week, and I did not see any other trade for the remainder of the week based on my assumptions, based on my SMTs. I did not see anything. And then Friday, I tried to go short, and then it stopped me out again. And because I also failed on Friday because there's no SMT, so 100% loss without an SMT on board.